Hey traders, Akil here, and welcome back to another weekend edition of the Trading Edge. Well, I guess it's Friday, so it's not technically the weekend, but we're coming off a holiday week in the US, Fat Boy Thursday, aka Thanksgiving, so today feels like the weekend. Anyway, I appreciate you guys joining me, especially appreciate you guys joining me live for the premiere. This is a new feature that I've been using on YouTube for about the last 3 weeks, where I premiere these new videos live and I'm with you guys on the chat, and we can kind of have that back and forth interaction with not only myself but the other traders watching live during the video. And I've just found it to be a very, very powerful experience. The feedback has been tremendous from you guys. It makes you feel more involved. You can actually ask questions and get answers while the video is premiering. And well, as long as you guys keep enjoying it, I will keep doing it. Now, if you're watching this on a recording, just make sure you hit the subscribe button below. That's the little red button, or should be red button. But also make sure you hit that little bell. That's the notification tab. That way, whenever I set up a premiere, and I usually let you guys know at least a few hours in advance, if not days, you will know exactly when it's launching, and you can be here, join us live, and be a part of the party. Now, in today's trading video, I'm going to do a little bit something different, right? We are going to talk about a few trading opportunities. We're going to look at Bitcoin. We're going to look at the euro dollar. But I wanted to talk a little bit about trading psychology. I had a few really good conversations yesterday while watching my Dallas Cowboys whoop on the Redskins. First place in the NFC East, but I don't want to jinx anything. Probably jinxed Everton for tomorrow just by saying that. But anyway, I had a few good conversations on Instagram and Facebook with some traders that were having some issues, concerns, problems. And as usual, right, a trader's problem is rarely isolated, meaning you rarely have an individual problem. Typically, something that you are struggling with is something that, 1,500 other traders are struggling with. And being someone myself who kind of went about finding success the hard way, I didn't go to an Ivy League school, learn about economics and whatnot, and come out as a super trader. I was really self-taught. I found a trading coach that helped turn my trading around, and even still went through things the hard way, went through a lot of ups and downs and ups and downs. And to this day, I really attribute my success to really just running out of ways to fail, right? I did basically everything so wrong, right? Let me know in the chat to the right if you're kind of on the same page with this. I did everything so wrong that I eventually just got right? Imagine, success being like, the path to success being like 100 doors, and behind one of those doors, right, is success, right? Your dreams, your desires, your goals. And, basically I just opened every door and failed until I found the right one. And that's not a luck thing. I'm not saying just fail forever. You have to make deliberate actions and have deliberate intentions about learning from your failures and using them to get you on the path to work on the right things the right way. And even then, you still have a very, very small chance at success. But I guess what I'm saying is I went through the school of hard knocks. So typically when a trader has an issue, a struggle, an obstacle, I've gone through the same thing. So what we're going to do today is start things off. Right? We're going to do some technical analysis. We're going to look at the euro dollar chart a little bit later. So for you guys that only like the charts, just hold your horses a little bit. But I want to look at Bitcoin, and Bitcoin was a prediction I made probably about a month ago, right, where everyone called me crazy. So I want to have a chance to follow through on that. But I want to take the conversation I had with these traders, and I want to show you how those obstacles actually relate to the market, and how a lot of traders can get in trouble if they're kind of in this same scenario. So let's head over to the charts and I'll show you exactly what I mean. All right, gang, so I want to start off by just reviewing the conversation that I had with this trader. And obviously I'm going to keep this conversation, or the trader's identity, anonymous, because this was a private conversation that we have. But understand that in no way am I trying to poke fun at this trader. I'm not laughing at this guy saying, "Oh, you're an idiot. You how can you think like this?" That's not true at all. But I do think it's very valuable to the community that I share this, because again, typically when you ask a trader, and this is one of the beauties of having the chat over at Tier 1, right? Typically traders believe that they're on this island, that they're the only ones that are struggling, that they're the only ones that have this issue. They're the only ones that can't seem to get this concept. And that's not true. But you don't know that because you're typically the only one out of your friends that trades. And when you go surfing social media, right, everyone's quick to tell you about their glories and how great they are. And everyone wants to hide kind of their hardships. And it's kind of depressing. And the trader's first question was this. He said, Akil, can you be so kind to tell me what's your view on the dollar South African rand? And first and foremost, right, it's very, very hard for me to answer a question like this, mainly because it's not enough information. To tell me my view, it's, is that from a day trader's perspective on a lower time frame? Is that from an intraday trader's perspective on a hourly, a daily time frame? Is it an investor, a buy and hold type deal? So if you are going to ask me questions like this, just make sure you be detailed, because it's, again, I just don't know. And that kind of goes back to a concept we've been talking about with our clients for a while, about how I want to get rid of really the identifying trend, right? Talking about, hey, this is a trend continuation or a counter trend, and really simplify it into more of a basic movement. I even tease that I'll be putting out a course potentially called the Foundation Course 2.0. The original Foundation Course was a real deep dive into candlesticks and getting rid of all these fancy candlestick names and just focusing on the core movements. I'd like to do the same thing with, I guess, the bigger picture of technical analysis as well. And if I find out a way how to do it, or when I put it together, I think it'll be pretty awesome. But the point is, you got to be more detailed, because I just don't know. And I respond to the traders. I'm not in front of my charts. I'm not too familiar with the pairs. There's something specific you're looking at, because I kind of had an idea where the trader was going. Typically, when you get this question, a trader is involved in a trade. The trade isn't going in a direction, and they're looking for some type of confirmation that they're on the right path to kind of stop them from making a mistake. So he says, I entered a buy, I think, right? That's a red flag. I entered a buy, I think. You should know what you're doing. I entered a buy, I think, on Monday, and it keeps going down. I don't know whether to have delete the trade, or will it go up soon? So I don't know what to do with this trading situation. Now, for you guys on the chat to your right, let me ask you this. What do you think this trader should do? They're in a buy position. The market is going down, and they don't know whether they should keep the trade or not. So they don't know whether they should hold on and wait for it to go back up, or they should cut their losses. What do you think this trader should do? Yeah, this trader should exit immediately. And the trader should exit immediately because it's obvious that they don't have a plan, right? I would say about 90% of the hard work of trading is done before you ever enter a trade, meaning that when you do your analysis, right, there's that word again, analysis, right? We're not really traders, we're technical analysts, right? When we do our analysis, right, we should be able to come up with the conclusion and make the decision of where we want to enter, where and how we want to enter, where and how we want to get out of the trade if it goes in our favor, where and how we want to get out of the trade if it goes against us, right? We should know all of that before we enter the trade, because that goes back to risk management, right? If you don't know where you're getting out, you don't know how much you're risking. If you don't know how much you're risking, you're not really a good risk manager. And my rule of thumb is, if you ever find yourself in a bad trade, so a trade that doesn't meet your plans, and obviously if you have questions like this isn't a trade that's within your rule set, then you should exit immediately. And that's what I kind of said to the trader. I said, I would advise that you stick to your rules of your trading plan. That's a little nudge saying, do you have a trading plan? I already know the answer, but I want to see if this trader recognizes it. You decide to place your stop loss where it's at for a reason. Again, I don't think this trader has a stop loss, but just kind of throwing little jabs in there just to see, little probes. Unless if you decide to place a stop loss, you put it there for a specific reason. There's no need to deviate from your initial decision making unless your plan says so. He says, thanks. And then I say, if this trade wasn't based off ending your trading plan, exit immediately. So the response after that was, in fact, that is what I was supposed to do. As soon as I realized that I've contravened, I don't know that word, but I've done that to my trading plan. My knowledge is not the best, guys. I apologize. Blah, 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 blah. I will check whether to see it has a chance of going up or not. I may have to take a loss like a man. Now let's scroll down a little bit here. He says, this is the next day. Not following my trading plan really punished me yesterday, but I have learned from it, right? Tell me which strategy is the most effective and profitable one. And this goes back to kind of, there is no best strategy. The most effective strategy in my response was, is the one that a trader trades consistently, the one that they have taken the time to develop and test and demo trade. And finally, when they're live trading, they trade it consistently without error. There's no shortcuts to success. And then we went on to have another conversation about the other thing is the abrupt change in the market, being very bearish, all of a sudden very bullish, and vice versa. Like you see in the market being bearish, you enter a trade, and after that it's very bullish, and now you must make a switch to your mind as well. And it's just, we're just going down the path of, this trader doesn't really know what to do. He's bouncing back and forth, bullish, bearish, this and that. And that's kind of the snowball effect that happens as emotions start to take over you. You get involved in a trade, it doesn't go the way you expect it to. You get emotional, fear, greed, all that fun stuff, and then your mind starts floating everywhere. And then we come back the next day, it says, I'm so happy I recovered from the loss that I took yesterday, even more. And again, my opinion is that it was a revenge trade, that the trader was going into the market red-eyed, looking to get back at the market, looking to find some opportunity to make his money back. And my response is, I think it's best that you stop trading for a while and focus on your education. And he says, I understand it's the wrong mindset, but can we talk about what the right mindset is? And my final response was this, and we'll get to the chart in a little bit. You should be treating your trading like a business, right? A developed, tested plan, using a developed and tested plan that is proven to work, and then consistently execute that plan in the market. The focus needs to be on the process over the outcome, meaning you judge yourself on the trade execution and not the result. And I want to give you an example of kind of the same issue that can happen using the Bitcoin chart here. Now, if you guys remember a few months ago, we talked about Bitcoin. This was a very controversial idea because I had looked at this formation, and what I saw here, right, and technical analysis can be interpreted different by different people, but what I saw here was a descending triangle. And from a technical perspective, from a classical technical perspective, this type of pattern breaks down to the downside. Now, I am not familiar with Bitcoin. I'm not familiar with the cryptocurrency market. I know technical analysis works across the board no matter what market you're trading, but it does work differently. Different markets have different personalities. The stock market is more of a trendy market, right? The Forex market is more of a market that consolidates. I'm not really sure what crypto is. I mean, if I had to guess, crypto is more of a kind of a greed and fear type market where you see high volatility moves based off greed and fear, but I just don't know for sure. But from a technical perspective, I came in, I said, based off this type of pattern, I would expect to break out to the downside. Why? Because price keeps testing this level, right? And each time we fight back, the bulls are able to push it up lower and lower and lower, right? So the bears fight the bulls off here, the bears fight the bulls off here, the bears fight the bulls off here. And you can see the selling pressure is just gaining momentum. The buying pressure is just losing momentum. It's only a matter of time before we just break the bottom. It's only a matter of time before the buyers say, you know what, this is pointless. Why am I buying? I'm not getting anything out of it. In fact, the results are worse each time. I'll just give up and find another place to buy. And we see a breakout to the downside as that selling pressure takes control. And again, I caught a lot of flack for this on social media because I guess it was opposite to what most people were posting. But it's a classic charting pattern. That's what I see. I don't have any personal bias. I don't want Bitcoin to go higher. I don't want Bitcoin to go lower. I don't really care. I analyze the charts and I let price action tell me, what to think. And let's say you're a trader that was buying down here. And this is going to go to the psychological example. Let's say you're a trader that was buying down here and maybe you've bought a few times over here. You keep buying some more because you're like, oh man, support is holding. This is awesome. Buy, right? Let's say you keep buying down here. And then eventually the market breaks, right? So now you're in a position where you should have a stop loss, right? If you are a trader that's following a trading plan, if you're disciplined, you should have an area where you say, okay, well, if price action reaches this level, then that's when I know I'm wrong. I'm going to cut my losses, get out of the market, blah, blah, blah. But let's take the example of the trader I just showed you on with the message, where it's clear that the trader doesn't have a stop loss. They're emotionally trading, and you're looking at this move go against you, and you don't really know what to do. So you're shooting an email out. You're like, Akil, what do you think about Bitcoin? Think it's going to go higher? This is a false breakout. And the more price moves against you, right, the more scared you get. You keep losing money. You keep hoping and praying that's going to turn around. And then eventually you do something like this. You say, you know what? I'm finally going to do the smart thing. I'm just going to cut my losses right here, right? Boom. So you cut your losses, which is the good thing, right? You should cut your loss whenever you're in a bad trade. Preferably you do it earlier, but you should cut your losses. But here's where the emotional toll takes place, right? You just took a big loss, right? The market is full steam, right? If we kind of go back to, kind of just do the replay feature here. We kind of go back to this candle right here, right? The market is moving full steam. Boom, 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 boom. Let's go back a little bit more here. Market's moving full steam and it stopped you out, right? Now, we talked about the initial kind of reaction being what? What's the first reaction that you guys get as price goes against you, as you lose money, right? Obviously, it's a little bit of pain, right? And that pain helps the market break through, right? Your sell stop orders help the selling pressure break through. But then it's kind of revenge, right? You wanna make it back. You wanna get some money back, right? You see that you were on the wrong side of a high momentum move. So the quick fix would be to get involved on the right side. So you stopped yourself out and now you decide, hey, you know what? I'm just going to sell. I'm going to sell right here, right? I'm going to make a little bit back real quick. I'm going to catch maybe the end of this move, and that previous loss I took isn't going to be as bad as it was before. And what happens, right? You guys tell me, what happens as soon as you sell? Because I know you've been here before. I've been here before. Right? What happens as soon as you reverse your position and you sell trying to make that quick buck? What does the market do? It does the exact opposite, right? And we haven't seen that yet here, but I would expect it if we kind of just follow through what Bitcoin is doing. We go down a little bit, right? And then we start to consolidate. And typically you get involved in the end of the move, and then price starts going like this. Right? And then you lose on the back end. And not only have you taken one loss, but now trying to get revenge, you've taken a second loss. And again, that snowball effect just starts compounding. And these are the actions that cause traders to really do major damage to their trading account and even more damage to their trading psyche. So I'll tell you what, I'm currently reading this awesome book by Stephen Burns. If you guys are listeners to the podcast, I interviewed him about a month ago. It was an awesome podcast episode, I believe episode 99 or 101, but it was titled How I Achieve Financial Independence. And he has this great new book out called New Trader, Rich Trader, New Trader 2, some way there. But in that book, it gives a massive amount of trading gems. And on the section I just read, it talks a lot about separating your really emotions from trading, separating your ego from trading, this need to be right, this need to avoid being wrong, and really treating your trading like a business, right? Many newer traders struggle because they focus on making profits. Many successful traders are successful because they focus on managing risk. And that's kind of the difference in the mindset, a different way of saying process over outcome, kind of what we preach here at Tier 1 Trading. But when you get in scenarios like this, you can see that the trader is so focused on either not being wrong, right? Ego, or not losing money, right? Fear, hurt of losing money, that they end up making bad decisions and they typically put themselves in a worse scenario. Now, the part that I didn't share about this trader is that he actually went on to really revenge trade. And this was something we talked about last week, where after taking that immediate loss, the initial emotion is, I got to make it back. I got to make it back. And you can just get yourself into even more trouble that way. So you got to focus on treating your trading like a business. Understand that you're not always going to be right. Understand that you can have a losing trade and have it still be a good trade. You can have a winning trade and have it still be a bad trade, right? You got to disassociate good with winning and bad with losing. That's very, very, very important if you want to see consistent profitability. Now, the next example I want to give you is kind of similar. We're going to look at the same chart again, but give you a different perspective. And this one stems off of a quote of the day that I shared from my buddy David Floyd. So I'll read you that quote in a little bit, and then I'll show you an example of how this relates to the charts as well. So on Thanksgiving, I posted a quote of the day. This one was from a buddy of mine, David Floyd. By the way, if you guys are into stocks, commodities, make sure you follow David Floyd. I believe his handle was Aspen Trading. That's the name of his company. Brilliant mind. One of the most brilliant traders I know. Very knowledgeable, fundamental, very sharp and keen, technical. A great trader with the right intentions as well. I spoke to him. He always tries to get me to come out to Oregon, which I'd love to. Just my schedule just doesn't work. But he wants to help traders, and he's a great source of knowledge. So make sure you follow him. He's on Twitter. Go to his website. Go to his YouTube channel. He's on Real Vision. Great follow, David Floyd. But he had a quote the other day that I liked, and I put it as my quote of the day. He says, "Like any trader, you reevaluate your thesis as new information comes across. And that's the one thing that's key. You don't want to get hung up on the original thesis as new information enters. A lot of people do, and that's a major mistake." And this kind of goes hand in hand with not being able to accept being wrong, right? In the example I just gave you, right, the structural level that would have told you to get long or stay long has been violated. Right away, you should say, I'm out of the trade, right? My prediction is wrong, lose a little bit of money, boom, I'll find a next opportunity. What people do is they let their ego control their trading, and they don't really care about making money. You'd be surprised how many traders don't really care about money. They'd rather care about being right or wrong, and they refuse to accept that they're wrong. They refuse to accept that they're wrong, and they hold on to positions like I just showed you just because until they're stopped out, right, they're technically not wrong, and they don't want to deal with that pain of being wrong, even though the information on the price chart has changed, right? Here at Tier 1 Trading, right, we simplify how to identify trading, how to identify trends, right? Trend continuation, trend violation. And really the market in general is a place that rules don't apply, right? Nothing applies 100% of the time, but with working with traders over the years, we've developed rules that will give them a solid foundation of what to look for and will encompass most scenarios. And one of the principles that we teach is the lower low, lower close, higher high, higher close principles, right? Break above, break below, close below. And basically that tells us when a level of structure is violated and when we should start thinking the opposite direction. So each and every time we look at a price chart, we go through a process called IPDE, identify, predict, decide, execute. And that sets up our big picture view of the market. We identify what happened, we make a prediction based off of that, and then the second half, we get into kind of more details about how we trade it. But each and every time we look at that, we go through that process. So if we're going back to Bitcoin right here, right before the big break, we're looking at this and everything has held steady, right? Price action is still holding structure. There's been no type of violation. We can make a prediction of a potential short move because we're familiar with the pattern formation, but we don't have that violation of support yet. So we can't really get involved with that move, or we can't make a pure prediction that price action is likely to go lower, right? So we're working off one type of information. And let's say you're a trader that's looking to get long, because that's the example we've been going through. You're looking to get long here. As long as support holds, it still supports your original thesis, your theory on the market. But, right, as soon as this happens, right, as soon as we see this, any second now, boom, as soon as we see that, we have what's called a lower low, lower close. We have a clear on the daily, a clear violation of previous structure support. As soon as we see that clear violation, we have to rip up our piece of paper, throw it away, and start anew. Right? Imagine like a scientist, right, in a lab, and you're hell bent on this one thesis, this one hypothesis, and you're testing it, and then something happens, and it's like, okay, that doesn't work. Does that scientist try to force the idea in there? Right? No, they say, you know what? back to the drawing board. That's a horrible ripping paper sound, whatever. They go back to the drawing board. And as traders, we must do the same thing. So we go back, we repeat that IPDE process. We look at it as anew, right? And sometimes you right click and take all your chart drawings away and start fresh. And you say, okay, well, now what do we have? Well, now we have a lower low, lower close. Therefore, right, if I have a lower low, lower close, then I can no longer make the prediction that price is likely to go higher because support has been violated. But I can now make the prediction that price is likely to go lower. And what we're doing is we're changing the thesis. We're not in love with the single idea. I think in the caption for the quote I gave, I said, they say that love is blind. And when you fall in love with a singular trading idea, you often become blind to the changes that have occurred in the market. We have to put our ego to the side and be analysts. We can't fall in love with a trading idea. We have to read the story that price is leaving us. Right? That's the only way we can be consistently profitable. We have to be okay saying, hey, man, that was wrong. It's funny. I post a few ideas on TradingView, not a whole lot, right? I love TradingView. It's an excellent source, but anytime you post in a public forum, you get 90% of traders have no idea what you're talking about. Not from a technical perspective or a trading perspective, but just like a philosophy perspective. So it's funny, right? I post ideas all the time, and all the time whenever they lose, right? Funny, whenever they win, no one says anything. Whenever they lose, you get the traders that come in, ha ha ha, told you were wrong. How does that feel? And I'm like, I don't care. Wrong all the time. Wrong all the time, right? Either it's a trade where I never took action because I never had confirmation. So I'm like, well, I wasn't actually in the trade. I didn't lose any money. I don't really care if my analysis didn't work out. Half the predictions we make won't work out, right? I didn't lose any money. Or even if it's a trade that I was involved in where I did lose money, I go over it and I'm like, well, did I do everything right? Okay, yeah, prediction was right. Yeah, the market just didn't do what I predicted it. It happens. Here's a secret, right? No one is 100% correct in their predictions. Nobody. In fact, the best traders of all time, right? The best traders of all time have win percentages between 20 and 40%. Did you know that? No, you didn't, right? Because the internet tells you got to be 90% correct or you're a loser, right? You got to change your philosophy and understand what the reality is. And we're so blinded to the reality because it doesn't sell, right? No one sells EAs going, hey guys, buy my magic EA. You'll be right 20% of the time. Oh yeah. You're like, no. Why would I do that? So, and again, that's just the reality of the industry we live in. But you got to be able to redo that analysis. And here's what I would do here, right? So as soon as we have that violation of structure, and I already had a short bias, but let's work off the perspective that you were someone that was looking to get long. As soon as we have that violation of structure, boom, there goes your long analysis. You're now shifting your mindset to saying, I should look to get short. Now, you're shifting your mindset in a different way because in the first example, we talked about shifting your mindset purely based off of emotion, feelings, right? Your Drakes. This time, we're shifting our analysis based off what happened on the chart. So we're looking to get short. And the question that we're asking ourselves, again, identify, predict, decide, execute. Okay, so we identified the break and close below structure. Let's kind of just get up to speed here with what has happened. We identified the break and close above structure or below structure. And we're seeing that price action came down to another level of previous structure support and resistance right here. Now, the question is, if we're going to continue to go lower, right, then where's the next place we can go lower to? And if we are going to go to another level of structure, that lower level is going to come right here around the 3K mark. Let me get the right line on. Right here around the 3K mark. And it's going to be a little bit hard to see, but if you look at my chart here, right, previous level of structure resistance, boom. That level of structure resistance was eventually broken. Actually, we tested it twice. Here's another one, different arrow for you, right? Boom, boom, two tests right there. Eventually it was broken. Previous resistance now became what? Support, right? We call this a structure swap area where resistance was hit, right? Ceiling was broken through. The ceiling now becomes the floor, right? Peter Brandt, another great trader I look up to, has a nice name for this called the ice zone because he talks about a sheet of ice over a lake, right? The sheet of ice on the bottom, it stops the fish from going up like a ceiling. But for those walking on top of the lake, the the sheet of ice stops the person from falling in. So it's structure on both ends. It's pretty cool. It's at the same point. And these are very powerful points in the market to look for. So we identified a lower low, lower close. We can make the prediction that price is likely to continue lower to that level. Now, if price action is likely to continue lower to that level, how is it likely to get there? And there are a few ways. It's a little too early to tell what's happening right now. We're obviously losing momentum, but this is also the Thanksgiving holiday week, so trading is a little bit thin. But two ways I would look for it to get there, right? One, put in some type of consolidation and breakout pattern. Think your flags, your wedges, your descending triangles, something like that. Two would be a pullback trade, where you pull back in the previous structure, right? Where it was broken, and then you look for an opportunity to sell and go lower. So instead of getting emotional and selling right away, I got to get involved in the move right away or I'm going to miss it, right? Be patient, right? People that sold right here, probably taking some profits down here. We looked left, we saw a little level of structure down there, right? There's no reason to believe that, there's no reason not to believe that we may see some relief. And again, it could come in the form of consolidation. It could come in the form of a pullback, but we could see some relief. We could see the market pull back, and it could offer us a second opportunity to get involved in the market. And what you want to do as a trader, you want to be patient, right? Don't hop on the end of the move, but wait for the beginning of the potential next move, right? And that's how you get involved in good trading opportunities. That's how you manage your risk as well. And of course, you avoid doing dumb stuff, which is emotional-based trading. So two examples there of what can kind of get traders in trouble, and hopefully some tips on how to avoid that. And I bring this up, and I preach this each and every week because this is the holy grail of trading, guys. It's not the secret strategy. It's not the best strategy, the best technique, this, that, time of day, right? You don't just have to trade the London session to only be successful. It's really about what lies in here. It's about being very, very strong mentally, being very, very disciplined, and understanding that the goal of trading isn't to sabotage yourself, right? If you do the right thing, it doesn't mean you're going to be right all the time. But just like a casino, right? You have a slight edge in the game, and you're looking to exploit that slight edge over and over and over again without error. And that's how traders become consistently profitable. And if you talk to any consistently profitable trader out there and you say, look at their equity curve or something like that, they'll tell you it's a slow grind. It's not just elevator to financial freedom, not this elevator from a $10,000 account to $1 million account. It's a very slow up and down and up and down and up and down and up and down. But the key is, just like a trending market, those extensions are longer than those retracements, meaning that their equity curve is continuing to make higher highs and higher lows, and you're moving in the right direction. And when you add a nice money management and position sizing strategy onto that, boom, there you go. That's how you achieve trading success, while also, again, managing those risks and making sure you're not in a position where you can blow all your money. Now, I want to follow up on a euro dollar setup. And this is a setup I talked to our traders about earlier in the week. And it's not the best setup in the world. Well, I guess we'll do this. Instead of me talking about it, let's flash back to the Trading Edge video I put out to our traders on Tuesday. I'll show you a look at my initial analysis, and then we'll come back to the charts and I'll show you how my analysis has changed as the week progressed. And waiting for confirmation before entering. So I thought that was a pretty cool example. Now, if we take a bigger look at what the euro dollar is doing, right? The euro dollar is potentially putting in a head and shoulders pattern. This is going to be an interesting one because there are a few levels that you can look at as the shoulder, right? Let me just get kind of these Keltner channels off of here real quick. If we look at this chart right here, there's two places that you can look at as being the shoulder. And I'm sure that some of you guys are going to look at this level right here. And I do think this is a decent level. You can tell that we've probed the highs up here as well. If you guys remember, this was the level we were looking at on the lower time frames. This would be a decent level to look for as a level of previous structure support. However, technically speaking, if we're looking at a shoulder, our shoulder move is going to be right here. This is going to be our beginning of our neckline. This is going to be our head down here. This is going to be, as of right now, the retest of the neckline. We actually don't know if this is going to be the retest or not. We won't know that until hindsight. But we're assuming this is going to be the retest of the neckline, which means if we're looking for a symmetrical head and shoulders, we should probably map out an area that looks like this, right? Yes, you can start looking for opportunities if you're an aggressive trader that likes to buy the shoulder. Yes, you can start looking for opportunities right there. But I'd give yourself all the way down to, again, that magical 113 even handle, which has been ever so powerful over the last couple months or so, as kind of that far range area to look for that shoulder. Now, for me, head and shoulders, I don't personally trade the right shoulder. It has to be a very unique situation for me to do so. But what I would be looking for is this. I would be looking for price to return, right, to our neckline, and an opportunity to buy once we have violated that neckline, confirming the head and shoulders pattern, right? Now, projection-wise, let's just take a look at this real quick. And let's say, now if you are someone who is looking to trade the shoulder, if you're an aggressive trader, I know some of you guys are, and you're looking to get involved at this shoulder line because you know it will present you with a magnificent risk reward, even if you're going towards our smaller target level. What you may want to do is go down to your lower time frame. Let's go down to a 1 hour chart, and then look for a normal entry reason. So looking back on the charts, right, here's what has happened at this level. So if I just delete this box here, right, we can see that price kind of ebbed and flowed up here, right? We came up, right? We're creating kind of higher highs, right? We're coming back, retesting the lows, right? Our lows are getting slightly higher, same highs here, right? We're bouncing back and forth all over the place, right? If we were to simplify the junk that I just put on there, we would have a pattern that looks loosely like this. Give me a second. We would have a pattern that looks loosely like this, right? We have lows that are sloping up. We have highs that are relatively even. This is an ascending triangle type of pattern. If we look at the move right before the final breakout of this ascending triangle, we have a very nice level right here. If price action were to come down to this level, again, we're already in the top of that zone, but if price action were to continue down into this level right here, I think this is an excellent opportunity to look for some type of confirmation of a reversal, whatever that may be, and look to involve yourself in the move up. And what you'll be able to do there is, as I mentioned before, right, involve yourself in a trade that gives you an entry like this. You have a relatively small risk. Ideally, well, if you want to be a little bit more conservative, you can put a risk down here right underneath the 112.60 level. But, honestly, with this level right here, you want to give yourself enough breathing room, but this level should hold if we're going to see a reversal. So you can have stops right below this, really right below the 113 even handle. Let's get below there, that psychological number. And you can see that that's an incredible risk reward. Even if we want to take an even smaller level of targets, that's going to put our first target potential right up here at a retest of that neckline, right at 114.50s. And then you have the two higher levels that I talked to you about earlier. So could be a decent opportunity here. And again, my philosophy is this. I'm willing to take riskier trading opportunities. An entry at the shoulder would be considered a riskier trading opportunity. I'm willing to take riskier trading opportunities if I have a very positive risk reward that's in my favor. All right, so lastly, I want to follow up on the euro dollar. And you can see that price action did make that retracement. We did make another smaller retracement back up before extending lower. We may actually be putting in a one-to-one measured move here for you guys that have been up to date with the videos, right? A few weeks ago, we talked about AB equals CD pattern. But this is actually a negative for me. So this kind of falls in hand with reevaluating your analysis. This is actually a negative for me. I really like V tops and V bottoms. So moves where price action, just like this at the bottom, right? Price action tests the level and reverses right away, right? As soon as we get a little bit more choppy, it makes it slightly more difficult for me to take targets just off of, my technique my philosophy is heavy in support and resistance. And those are often places that I'll look for target potential. So this scenario, which was, again, a risky one to begin with, keep that in mind. I hope it showed that in the first video. But this scenario, which was a risky one to begin with, is getting less and less appetizing for me to take. Now, with that being said, the opportunity isn't done. Let's go down to a 60-minute chart here, right? Although we've ebbed and flowed, right? And currently we're consolidating right here. This morning looked like a higher high, higher close. That would have been a decent 3-bar reversal. But again, we also just broke structure. So it's an iffy type of scenario. But if you're a trader, right? If you're a trader, that's a lot of ifs. Anyway, if you're a trader that's looking to get involved in this type of scenario, right, something else has occurred on the chart, right? As the market has bounced up and down and all the way around, something else has formed, or something else is very close to forming. Can you tell me what that is? Who sees it? Who's got the eyes? Who's trained their RAS? And again, this was the original level we were looking at. Bigger level right here, smaller level really right inside here, right? Well, some of you may see this as an advanced pattern formation, right? Depending on your eye, and it could be two types of advanced pattern formation. I'll draw them both out for you, right? If you're looking at this as an X leg right here, this level, boom, right before the breakout, you're going to have a swing low to swing high, X to A to B, B to C, and then a CD completion right down there, down at about 113.27. Now, if you're drawing a slightly longer X leg, let's say you're looking at this move right there, right? All of our eyes are going to be slightly different. Then you're going to have a potential bat pattern. That's going to give you an entry a little bit lower, which wouldn't really be as appetizing given the initial analysis. But I'll draw it on there anyway because, again, I'm going to give you guys just perspective on the different opportunities that exist. But going back to that first pattern formation, right? If you're looking at that as a Gartley, you can see that Gartley pattern is going to complete right in that lower level that we talked about. And this could be an excuse for you to use an aggressive entry. And we talk about pattern trading. You can trade patterns on their own right. But we have a few traders that also use patterns as, say, entry techniques. We have a few traders that have kind of dug deeper into patterns. And when a pattern formation works inside of their overall analysis, they can trade it a slightly different way. So what you can do here, if you're having trouble getting an entry technique, you can use this advanced pattern formation, this Gartley pattern, as an entry technique into the trade, and then base your targets off of the bigger picture. And of course, you can do everything in between. You can do half and half. You can do, break it up into thirds, however you want to do it. But the point is, this can be your reason for entry if you weren't able to get another one. So I just want to follow up with this because this is something that we talked about throughout the week. Again, for me, the opportunity is meh. But that's just me personally, and I know that we all have different perspectives on the market. All right, so thank you for joining me as always. Do me a favor, if you like what you see, 3 things always help this video. One is to share it on social media, whether it's an Instagram story. I love you guys putting up the stories of you watching my videos. It makes me feel good inside, right? An Instagram story, share it in a Twitter post, Facebook, any way you can share it is great. It allows us to spread the message about what we're doing here, spread the message of what trading is really about, and it slowly dilutes the other messages that are out there. And that's our goal here at Tier 1 Trading, right? To eliminate that junk, eliminate that get-rich quickness, eliminate that, hey, buy my $10 system that will make you profits faster than anything in the world, right? Because that type of stuff is killing traders. And it's not the trader's fault. I mean, there are some traders out there that repeatedly make the same mistakes, and that's on them. But there are also new traders out there that are at the phase of unconscious incompetence, where they're like a baby. They just don't know what they don't know, right? Little kids don't know that the stove is hot, and what happens? They touch it, ooh, they get burnt. We want to eliminate that and at least provide more knowledge of really what the reality looks like. And I've always been a firm believer that if you know what the reality is, if you know the obstacles that are in your way, you can make a better choice about saying, hey, is this something I want to pursue or not? And you could even be more knowledgeable about the path, the time that it's going to take you to be successful and what's needed. So share away, please. That's a massive help. Of course, if you subscribe to the channel, make sure you hit that notification button. That way you don't miss the next video. And of course, hit the like button. Leave me a comment. You guys know I read each and every comment. I respond to all of them. I believe that if you take the time to write something, I owe it to you to respond. So leave a comment, even if it's something like, hey, love the video. So if you do that, I'll be back maybe next week. When am I going to London? Maybe not next week. We'll see. Maybe next week for another YouTube video here. And of course, Tier 1 traders, I'll see you guys on the platform next week as well. We have an awesome Q&A set up for Monday. Probably going to be out Tuesday. Got some passport things I got to deal with. But we'll be back in the live room, kicking it, as always, Wednesday and Thursday. All right, take care. Plan your trade your plan. I'll see you guys later.